Sir, very happy morning to all. Happy morning, sir. So we are doing cost sheet. We have completed the concept question of cost sheet. We have to done the ICAI study material. 2 questions for the day is the target. Illustration number 1 and illustration number 2. There are only 3 illustrations are there in the cost sheet. So tomorrow we'll be doing the illustration number 3. Following data relates to manufacture of a standard product during the month of April. Raw material 1,80,000. Raw material is 1,80,000. Direct wages 90,000. Machine hours worked 10,000. Machine hour rate 8 per hour. So 10,000 into 8 comes to how much? 80,000. Comfortable?
Yes, sir.
Administration overhead. They specifically said that general administration overhead is how much? Selling overhead they have given per unit is how much? 5. That is for number of units sold. Number of units sold. Units produced how much? 4,000. That is the units produced. Whereas units sold is, that means still 400 units will be the closing stock. Right? Yes, selling price per unit is how much? 125. You are required to prepare a cost sheet in respect of the above showing N per unit, cost per unit and profit per month. It's a straightforward question. Yeah. Cost sheet for the month of April of the manufacturing concern. Units Monday. Units produced is equal to how many units? 4,000 units. Direct material, how much they have given? 1,80,000 divided by 4,000 comes to 45 per unit is the direct material cost. Right? Yes, add direct labor is 90,000 divided by 4,000 comes to 22.5 is the direct expenses. Nothing has been given. Hello, sir.
Yes, sir.
So the prime cost will be direct material plus direct labor plus direct expense, which comes to 2,70,000 divided by 4,000 comes to 67.5 is the prime cost. Add N overhead, factory overhead. Read the line, sir. Machine hours worked. Machine engirkum. Factory irkum. Number of hours is how much? 10,000. And machine hour rate is how much? 8. So 10,000 into 8 comes to how much? 80,000. That is N overhead, factory overhead. Add factory overhead comes to 80,000. 80,000 divided by 4,000. 20 per unit. So gross factory cost is, sir, prime cost plus factory overhead comes to 3,50,000. Right? 3,50,000 divided by 4,000. 87.5 is the per unit. Right? Is there any WIP? Add or less WIP stock adjustment, nothing is there. So gross factory cost is equal to net factory cost or works cost. That is 3 lakh divided by 4,000 comes to 87.5. Add administration overhead related to what? Nothing has been given in the. So I will get the cost of production as 3,50,000 for how many unit? 4,000 unit. 3,50,000 divided by 4,000 comes to 87.5. Add opening stock of any goods. This is the first year. First year opening stock irukadu. So you have to put a dash. So you will get the COGAS, cost of goods available for sale. So total comes to 3,50,000. Sir, COGAS, it is 87.5. If you want, you can write, otherwise put a dash. Less closing stock of any goods. Evlo units produce panna? 4,000 units le evlo units with it. So 4,000 minus 3,600 comes to is the closing stock. Should be valued at 87.5. So 400 into 87.5 comes to 30 is the value of inner stock, closing stock. You should not value per unit, put a dash. So cost of goods sold is how many unit? 3,600 unit. 3,50,000 to 35,000 pochana. 3,15,000 is the. Sir, inge edume illatadanaala per unit comes to 87.5. 87.5. Right? Add general administration overhead comes to how much? 35,000. Hello sir. Which divided by? Upper 35,000 divided by 3,600 unit comes to 9 points. Add selling and distribution. They themselves given that per unit is 5. So 3,600 into 5 comes to per unit. Avangale question le kuduthirukanga 5. So you will get the end of sale. Cost of sales, which is 3,15,000 plus 35,000 plus 18,000 comes to. This is for Monday or Konde? How much Konde? 3,600 units. 3,600 units divided by 3,600 comes to 102.22. 102. They have given selling price as 125 into how many unit? So 3,600 into 125 comes to 4,50,000. Automatically the gap, the difference will be the profit. 4,50,000 minus 3,68,000 comes to 82,000. 82,000 profit you have earned for how many unit? Divided by 3,600 comes to 22.78. That's what the cost sheet question number 1 is all about. Pakka? Yes, sir. Anyone got the right answer for question number 1? Raise your hands. It's very easy, no? Yes, sir. I'm moving into illustration number 2. Following information has been obtained from the records of ABC Corporation for the period from June 1 to June 30. This is opening and this is closing. Are you really with me? Yes, sir. Cost of raw material, which is opening stock of raw material, is how much? 60,000. Closing stock is 50,000. Opening stock of WIP is how much? 12,000. Closing stock of WIP is 15,000. Right? Opening stock of finished goods is 90,000 and closing stock of finished goods is 1,10,000. This is a purchase of raw material during June is 4,80,000. So to the opening stock of any material, raw material, we have to add the wages paid means direct labor. Factory overhead means factory overhead. They themselves directly given the factory overhead. Administration overhead related to production is how much? 50,000. Selling and distribution overhead is 25,000 and they themselves given the sales as how much lakh? Prepare a statement giving the following information. Raw material consumed, which is nothing but opening stock of raw material plus purchases of raw material minus closing stock of raw material. It is very easy. Next one, any cost? Direct material consumed plus direct labor plus direct expense is equal to. Next one, factory cost. Prime cost plus factory overhead will be the factory cost. In the question la WIP irka? Yes sir. So add opening stock of WIP and minus closing stock of WIP will give you the net factory cost. To that net factory cost you have to add the administration overhead related to production. You will get the cost of production. To that cost of production you have to add the opening stock of finished goods. You will get the COGAS. From that COGAS minus the closing stock of finished goods, you will get the cost of goods sold. That's what they have asked, cost of goods sold. To this cost of goods sold, add general administration overhead and selling and distribution overhead. You will get the cost of sales. Minus sales will be the net profit. Shall I proceed? Direct material, sir, we have to find out the consumed. Opening stock of raw material, 60,000. Add purchases of raw material. Less closing stock of raw material. So what is the direct material consumed? That's what they have written. Direct material is 4,90,000. In question la number of units produced kuduthirukangala illaya? No sir. Adanal ennala per unit express panna total mattum dhaan poda mudiyum. Right? Add direct labor comes to 2,40,000. Add direct expenses is nil. So the prime cost is what? 7,30,000, which is direct material plus direct labor plus direct expense. Add N overhead. Given how much lakh? You will get the N factory cost, which is prime cost plus factory overhead comes to 8,30,000. Add opening stock of WIP 12,000 less closing stock of WIP 15,000. So the gross factory cost or net factory cost? Net factory cost or factory cost or comes to 8,27,000. Right? Add administration overhead related to production 50,000. You will get the end of production. Cost of production, which is nothing but the factory cost plus administration overhead related to, which comes to 8 lakh. Add opening stock of finished goods, how much? So you will get the COGAS is 9 lakh less closing stock of finished goods. அவங்களே கொடுத்திருக்காங்க, ஜெனரலா தர மாட்டாங்க, இங்க அவங்களே 1 lakh, how much? So cost of goods sold comes to 8 lakh. Add general administration overhead, question la illa. Add selling and distribution overhead 25,000. So you will get the cost of sales of 8 lakh 80. They have given the sales of 8 lakh. So the profit will be 1 lakh 18,000 is the comfortable. Sir, 1 lakh 18,000 is the net profit. Net profit is nothing but sales minus cost of sales. Right? That's it with regard to question number 2. Are you comfortable? Yes, sir. How many of you got, sir, 1 lakh 18,000 as net profit? So try question number 3. It's a very normal question only, but the length of the question is little big. That's it. So tomorrow we'll be solving question number 3. With that, cost sheet will comes to an comfortable, sir. Yes, sir. I am with you from your heart. Anybody?